Hey everyone, welcome to the Chainlink video update for today, coming at you live. All right, let's take a look at this. But before we get started, this is not financial advice. I'm not your financial advisor. This market is extremely risky and volatile. You're responsible for doing your own research, doing your own trades, and managing your own risk. And this is just my opinion on the market. If you have any questions, you can hop in the Discord, and most of the time I'm there. There are some moments where I do try and get some sleep and such, but yeah, most of the time I'm there to answer questions and things that people have. If you need an invite to the Discord, feel free to throw in a comment, and I'll get you an invite. And also, if you like these videos, like, subscribe, share, and all that good stuff. So let's just take a look at Chainlink. All right. Um, you know, I don't want to I don't want to seem too overly confident. Um, but I've been saying for a long time. I feel like I've been saying this for weeks that 280, 285, 290 that we would be getting rejected there. So we got rejected here at 284, and we'll call them 97 micropennies. So 285 essentially within zero point zero 0.03 cents, we hit that target. Now, I said 285. I will admit I was wrong, but I was pretty darn close. You guys have to admit. All right. And so then what happened? Well, after we hit that, then we went down 6.4%. We are currently being held up, and you can see this clear as day. We are hanging on a thread on this 21 exponential on the 12-hour time frame. We are literally teetering at collapse right now. I'm not saying go sell. I'm not saying do a run on the banks. What I'm saying is manage your risk. If we close a 12-hour candle below $2.70, we're going to continue moving down. It is going to happen. We had a rejection at the 618. That just happened on the 9th. That happened this weekend. We got rejection at the 618. That is the reality. And we have been rejected at the 618. We got a little bit higher, and then we had this follow through, right? Just like the first time we tested the 618, we had a sell off. We went back and tested it again, and we had a sell off. So what gives? We are currently now below the important zone, which is at 273. And yesterday, maybe it was last night on the Discord, we were talking about support resistance flips and how we were kind of at that buying area because we were previously above this. And I was like, yeah, 273, probably a good place for you to put in your buys for these short-term swings. But then it just kept moving, right? And also at the same time, Bitcoin was moving. And I'll just put another plug for this here. Bitcoin still rules the market. It is fact that Bitcoin rules the market. Through arbitrage, Bitcoin rules the market. The whales, we'll call them whales, the market makers, the market movers, they all right. So I did a video of several months ago, and you can look it up. It's called the crypto altcoin scam. These altcoins are mostly created for transferring wealth. It is a way for projects to earn money, sure, but generally speaking, the market makers, the ones that have tens of thousands of Bitcoin, use these altcoins to transfer wealth. They'll do a markup on price because they're very illiquid assets. It doesn't take much to mark up a price, create a distribution zone where they can sell the majority of their assets, and then they go through a markdown, and then they do an accumulation, and then they do a markup. It's rinse and repeat, folks. That is the name of the game. And we went through a little bit of a markup here, and we are holding this level here at 254 as our accumulation zone. And I would say that our distribution zone is likely anywhere above $2.81, especially because this is the 618. So I'm going to remove this Fibonacci and I want to focus on something. So we know the bottom here is at $2.50 and we know that our 236 extension is at $2.40. So let's just take a look at one more thing here. When you have that 618 rejection, it is appropriate to pull out a pitchfork, go from the top, go to your first dominant pivot, and then go to your next dominant pivot. Okay, so we have a pitchfork here, which I'm not on a log scale, I'm on a regular scale. So this trend line here is going to be very important. It is going to be very important for us to push up and out of it if we are going to be bullish on Chainlink. Right now, Chainlink to me is bearish. After what happened yesterday, after what happened last night, I am bearish on Chainlink, especially if we close a 12-hour candle below $2.70. Okay, so if you did buy here at 273, right now you've got like a 1.5 cent loss. Not tremendous unless you happen to buy like a million Chainlink tokens. But yeah, definitely manage your risk on a 12-hour closure below $2.70 because it is very possible that we do come down here to $2.40. There is a high probability that we will come down to this median line if we get a rejection at the 618, which we did. Okay, so it is very possible that we do come down here. Let's see here. Yes, down here to 237. If it takes longer, the chances of us going even lower are higher. So, a couple things here that I do want to point out. So this goes down here to about 2.25. This 21 exponential moving average, just for the record, is likely going to continue to move sideways as long as this price continues to just consolidate in this zone. Okay, I'm going to color this yellow because that is what color the 21 exponential is. So just knowing this is a projection, right? So I'm going to zoom in here. We're going to pay attention to this pitchfork. Okay, so what we have created here is a trend line to pay attention to in both directions. We have our supporting trend line that we have to stay above, and we have our descending trend line which we have to break through if we want to be bullish. We have to stay above the 21 exponential on the 12-hour. We have to break above this trend line here on a 12-hour, right? I would even say that a wick above it and starting to consolidate closer to it, and let me go ahead and move to a lower time frame. We'll still have this line here, right? But we've got this trend line here, which is going to be important for us to push through. And as we're consolidating in this zone, we have to push above this. But right now, my bias has to be bearish, just because of everything that I'm seeing right now. On the 2-hour time frame, we're currently below the 100 exponential. We're trying to push above it right now. This 55 exponential at 273. And the 21 exponential here at 275. I would expect these to be resistance right now. I would expect them to be resistance. We had a little bit of an expansion, and you can see we were compressing right here with all of these different major moving averages, trying to flip bearish, but they didn't do it, right? So that's good. We had an expansionary phase to the upside where all of these moving averages on the 2-hour time frame were expanding. They were diverging in a bullish fashion, and now they're starting to contract again. And it's just going to be a matter of time before they recompress, before this 21 exponential does a bearish cross against this 55 exponential. So I do have to have a bit of a bearish bias on the trade. So I am back to the point where I am not advising a trade in Chainlink right now unless we can push above, I mean, if we can push above this 275 mark on the 2-hour, that would be ideal. But even going back to an hourly time frame, the hourly time frame, the 21 and the 55 have already crossed. And right here, again, 275, which is a 55 exponential on the hourly. We have our support resistance we can see here on the hourly, which is right there at 276, almost 277, where we had resistance, we had rejection, we had a front run of support, we had support, support, and then we had the breakthrough and then the confirmed rejection. So right there at 276, that is going to be another important level. And the longer this takes to play out, and I'll just do this real quick and then I'll be done. The longer this takes to play out, what we need to see is something like this for us to be bullish. But as of right now, what I'm expecting is probably going to happen is, so we had, our 1, 2, 3, then we're going to have maybe a 1, 2, 3, and then we're going to have this 1, 2, 3, and then we're going to get the rejection from there. More than likely, that's kind of what I'm expecting is going to happen. Sorry for the chicken scratch on that. Probably would have been better on my poly line, but nonetheless, I would be very careful. I would be very careful. On the hourly, we're looking like we're getting that support here on the 200 simple moving average. As we were discussing before, I believe that was the 12-hour. We had our support at the 21 exponential, which is an important moving average. The 21 exponential is very important. That next level of support is going to be down here, which is going to be at the 55 exponential. It just happens to be at the bottom of this Bollinger Band. But if we start to expand, then I would expect us to move back down here, as I've been saying for a long, long time. Back down here to 250, potentially 240. I'm not willing to say 225 just yet, but as you know, I've been talking about that as well. So we'll just continue keeping an eye on things as they go, but right now I do have to have a bit of a bearish bias to Chainlink, even though it does look like we are continuing to get a little bit of support here at that 21 exponential. So those are my comments on Chainlink. If you have any questions, feel free to pop in the Discord, but it's good to get these things documented. We did have that rejection up here at 285, just shy of it by 0.0003 cents, but nonetheless, it was close enough for me to consider that a valid sell zone. And now I think we do eventually come back down to this 240 mark, but we'll have to wait and see. Only time will tell, and we've got some time to go. I'm not sure if 205 to 215. I don't know that it will get that low. If we did get back down here, that would be a good test of this. But in my opinion, for us to have any bullish bias on Chainlink, we would need to see a reaction down there at $2 to $2.15 before we consider any trades. Because if it goes down that low, then we'll have to kind of outline it when we get there. I'm not willing to say that $2 is a good buy zone, although it does have a significant amount of support, or we should have a significant amount of support because of the resistance that we had there previously. But blowing through all these support levels could mean that it's just going to blow through $2. So I'd be careful putting bids at $2 at this point. But we'll wait and see. It will take time for us to get down there, in my opinion. So yeah, we'll just kind of take that with a one candle at a time. I'll take a look at NEO here in just a little bit. So good suggestion there. I'll take a look at that here in just a little while. But I'm going to go ahead and end it for right now. Hope you all have a good day. Again, happy Veterans Day for those of you in the United States, especially the veterans. And we'll talk to you all later.